Bitcoin is crashing again, and fear is spreading across the financial world. Billions of dollars have disappeared from the cryptocurrency market in a matter of weeks, leaving investors asking one important question. Is this the beginning of an even bigger collapse, or is it the opportunity that long-term investors have been waiting for? Every major market crash creates uncertainty. Headlines become more dramatic, social media fills with fear, and many investors begin questioning everything they believed just a few months earlier. This time is no different. Several factors are pushing Bitcoin lower. First, investors are becoming more cautious as global economic uncertainty continues to grow. During uncertain times, money often moves away from risky assets like cryptocurrencies and into investments that are considered safer, such as government bonds, cash, or gold. Another major reason is selling pressure from Bitcoin exchange-traded funds, also known as ETFs. When investors sell shares of these funds, the funds may need to reduce their Bitcoin holdings, creating additional selling pressure in the market. Large investors, often called whales, are also playing an important role. Even relatively small sales from these major holders can influence market sentiment. When smaller investors notice large transactions, many react emotionally, creating a chain reaction of panic selling. Market psychology is often more powerful than the news itself. Fear spreads quickly, and once confidence begins to disappear, even experienced investors can start making emotional decisions. But here's something many people forget. Bitcoin has experienced severe crashes before. Throughout its history, it has repeatedly fallen by more than 50%, only to recover over time. While history never guarantees future results, it reminds us that volatility has always been part of Bitcoin's journey. The question now is not simply why Bitcoin is falling. The real question is whether today's fear is creating tomorrow's opportunity. To answer that, we need to look beyond the headlines and examine what history, data, and investor behavior are telling us. While today's market feels painful, it's important to remember that Bitcoin has gone through similar corrections many times before. Every major cycle has looked different, but one pattern has remained surprisingly consistent. Markets tend to move in cycles of optimism, euphoria, fear, and recovery. During bull markets, investors often believe prices will continue rising forever. Confidence grows, more people enter the market, and headlines become increasingly optimistic. But eventually, reality catches up. Profit-taking begins, momentum slows, and fear replaces excitement. This emotional cycle repeats itself across almost every financial market. Bitcoin simply experiences these emotions more intensely because of its high volatility. One of the biggest mistakes investors make is trying to perfectly time the market. Predicting the exact top or bottom is nearly impossible, even for professional investors. That's why many long-term investors choose a different approach known as dollar-cost averaging. Instead of investing a large amount all at once, they invest a fixed amount on a regular schedule. When prices are high, they buy fewer coins. When prices fall, they automatically buy more. Over time, this strategy helps reduce the impact of short-term market swings. Of course, no strategy can eliminate risk completely. Bitcoin remains one of the most volatile financial assets in the world. Prices can rise or fall dramatically within days, and investors should always be prepared for unexpected movements. Successful investing isn't about predicting every price movement. It's about managing risk, staying disciplined, and avoiding emotional decisions. Experienced investors understand that patience often produces better results than panic. History has shown that fear can create opportunities, but only for investors who are financially prepared and willing to think long-term. That doesn't mean every correction becomes a buying opportunity, but it does remind us that markets rarely move in straight lines. Now, the biggest question remains, what could happen next? To answer that, we need to examine both the bullish and bearish arguments and understand why experts remain divided about Bitcoin's future. So, where does Bitcoin go from here? The truth is, no one knows with certainty. Anyone claiming to predict the exact next move is making an educated guess. That's why it's important to understand both sides of the argument before making any investment decision. Let's start with the bullish case. Bitcoin supporters believe its biggest advantage is scarcity. Unlike traditional currencies, which can be printed by central banks, Bitcoin has a fixed maximum supply of 21 million coins. That limited supply is one reason many investors see it as a long-term store of value. Another positive factor is adoption. Over the past decade, more businesses, financial institutions, and individual investors have entered the cryptocurrency market. While adoption has slowed during difficult periods, many believe it will continue growing over the long term. Technology also continues to improve. The Bitcoin network remains one of the most secure blockchain systems in the world, and developers continue working on solutions that could improve speed, efficiency, and accessibility. However, the bearish case deserves equal attention. Bitcoin remains highly volatile, and large price swings can discourage both retail and institutional investors. Regulatory changes, global economic uncertainty, and changing investor sentiment could all continue putting pressure on prices. Competition is another factor. New blockchain projects, stablecoins, and other financial technologies continue evolving. While Bitcoin remains the largest cryptocurrency by market value, it no longer has the spotlight entirely to itself. That's why experienced investors rarely rely on hope alone. They focus on research, diversification, and risk management. Instead of betting everything on one prediction, they build portfolios that can withstand uncertainty. Whether Bitcoin rises sharply or falls further in the months ahead, one principle remains the same. Emotional decisions usually lead to poor investment outcomes. Staying disciplined is often more valuable than trying to predict every market move. So before making your next investment, ask yourself one question. Are you reacting to fear or following a well-planned strategy? In the final section, we'll bring everything together, discuss the biggest lessons investors can learn from this market, and reveal the approach that many successful long-term investors continue to follow. As we reach the end of this analysis, one thing should be clear. Bitcoin is neither guaranteed to make you rich nor guaranteed to fail. Like every investment, it comes with both opportunity and risk. Markets have always rewarded investors who remain patient, disciplined, and focused on the long term. They have also punished those who let fear or greed control their decisions. That's why understanding your own risk tolerance is just as important as understanding the market itself. Diversification is one of the most powerful tools an investor can use. Instead of putting all your money into a single asset, spreading investments across different sectors can reduce overall risk while still allowing you to benefit from long-term growth. Another important lesson is to invest only money you can afford to leave untouched for years. Short-term market movements are impossible to predict consistently, but long-term planning gives your investments time to recover from periods of volatility. It's also worth remembering that every major financial innovation has faced criticism in its early years. Some technologies disappear, while others become part of everyday life. Only time will determine where Bitcoin ultimately fits into the global financial system. No analyst, influencer, or financial expert can accurately predict the future every single time. The smartest investors don't rely on certainty, they rely on preparation. They continue learning, adapt to changing conditions, and make decisions based on evidence instead of emotion. Whether Bitcoin reaches new all-time highs or experiences another correction, the most valuable investment you can make is in your own financial education. The more you understand how markets work, the better equipped you'll be to make confident decisions during both bull markets and bear markets. So, is this crash the beginning of the next great buying opportunity? Or is there still more